for tech support. Mark will be joining in just so stand by.
Hello, everybody. Dwight, are you there? I just had a computer crash right at the moment that I'm ready to go live, so I'm sorry about that. There is something that is really going on with the Zoom programming, and it's killing my program. Can you guys hear me okay? Yeah, sorry, John. How you doing? Sorry, I'm very discombobulated here. The Zoom program has been crashing on me all day, and I have no clue as to what's been going on. So everybody says my screen is good. So let's just kind of get on with it. So welcome to the second of the 3-day live webinar execution series. My name is Mark Shawson, the pattern trader. Yesterday, I kind of shared with you how I look at trades exclusively based on price. So I don't look at information. I don't, sorry, I just want to download some platforms here. Sorry, I am very disoriented here. So I only make trades based on price action, price patterns, price trends. And what I try and do is look at setups that will translate into high value trades. So sorry, I'm trying to just open up platforms here while I'm talking to you, and it's Accenture says, do you trade Bitcoin? I basically trade everything, but you know, so I don't even know where to. These are the trades that I came in with on the FX side. So I've been short the New Zealand dollar, Canadian dollar for 2 months now, since end of August. I started getting short New Zealand dollar Canadian at 80.45 area. It's trading, 250 points lower, and I'm still in this trade. I'm long some pound New Zealand, and I'm looking to buy pound New Zealand again tonight. I'm looking to add to my position. And I'm also long the euro, which I sent out an email over the weekend to get long. And on the stock side, I shared with you yesterday that I came in long Meta and Team. This is the stock of Team. I came in long 3,000 shares, and it was up about $10 today. So I made a nifty, whatever, $25,000. I got out a little earlier. I got out before this high, quite frankly. The market is just so jumpy. We're seeing the market down huge in the aftermarket right now because the markets are crashing after Google and Microsoft announced their earnings. So basically, right now, when I get a profit, I just take it. So I took a quick 25 grand and I'm gone. But what I was sharing with you yesterday was what I look for are areas, little pockets where I can take a shot. So I bought this right on the close at 194, and I banged out of this thing at like 204. I made $10 on 3,000 shares, literally in a few minutes between the opening this morning and sometime mid-morning. So, I think that you got this in the way, but again, I just look at patterns and opportunities where I can get in, at fortuitous times where I can get in here, risk this much, and then see what my opportunities are. And the same thing on Meta. I started buying Meta at 126, 127 yesterday. This is Facebook. It jumped up today. I banged out of this, fortunately, because it's also down in the aftermarket session. So, yesterday, and I just didn't have a chance to open up all my programs. I like to verify exactly what I'm talking about. I got in at 126 and 127. Today, 1 to 137. I banged out of this trade, and now I'm looking for the next trade. So this market is very volatile. Like I said, we've got all of these stocks down in the aftermarket right now. I couldn't open my stock program, so Microsoft opened down, Google opened down, Facebook opened down, and this is just the environment we're in. So we're at a very jumpy stage of the market where the market is in a huge downtrend, but we put in somewhat of a short-term bottom. So you can see that this is the triple Qs, this is the NASDAQ. We've been in this tight little trend. Today we broke out, and then now we're breaking back down, I suspect, back to this breakout area, and then I imagine we'll get some lift off. But it's just a very, very tricky area. You can see when markets get into bottoms, or just areas like this, they just go up and down and sideways. It seems like there's no rationale. And that's why basically I look at certain points to get in a trade, and then I jump out if I'm right. I don't just stick around, because these trends, you've come up pretty sizably from the bottom of the Qs. You've gone from 260 to 284 and 284 and a half today. And so, I suspect you're going to see some pullback, and then you probably go a little bit higher. But it's an extremely difficult market to handicap. But whatever happens, I am looking for all of the stock markets to go lower. So what we've been happening all this year is that we've had what we call dead cat bounces. We've had bounces in a bear market, where you can see right here, this is the pattern that has been driving the NASDAQ. So all the way December, January, the NASDAQ flashed this double top. And when it did, I alerted our members and said, this thing is going to come off hard. It's probably going to be one of the biggest, baddest bear markets we've seen in our lifetime. And I remain convinced that, we're still only probably halfway through it. So you can see after we come off, the markets make sharp declines, but then they make as quick, what I call these counter trend rallies, the dead cat bounces, but they are quick, they're swift, and they're vicious. And then you make a new low, and then you get another thing. That's like 25% rally. And now you've come back down, and now I think you're going to start rallying probably somewhere to the 280 to 300 area. We could fall short. Again, I am always looking for this market to continue lower. Again, I think that we are going to keep going much lower in this market. This is a bear market, and we're far from finished. So in addition to this double top, which simply looks like the letter M, this is a reversal price pattern. And when we see this, it basically says this market has topped. And if a market has topped, then over time, it's going to do what? It's just going to go lower. So this is the cadence, and this is what I expect. In addition to the double top, we also have this head and shoulders. So it looks just like a man and woman's left shoulder. The peak is the head. That's the right shoulder. And that's basically, so you have the double top and the head and shoulders. So all of this is extremely bearish. So this means every time you see one of these, you got to know that they're not real. They look real. They feel real. You do not want to be on the other side of it if you're short. But if you know what you're looking for, you wait for these things to exhaust, and then this is where I make all of my money. So I'm looking for this to peter out somewhere, and then I'm going to jump on the freight train again. So to me, it's all about understanding the cards you're holding. To my mind, most people are trading 15-minute charts, hour charts, 4-hour charts, whatever it is. You're not seeing the big picture. And if you don't understand the big picture, you can't understand the cards you're holding. So, when these jumps come, you don't understand why they're happening. They look random. You don't understand why they go from one direction to the other. But if you understand what the big picture is, this is what I call a governing pattern. So this pattern all the way 9 months ago, 10 months ago, 11 months ago, is dictating everything that's happening now. So this is a governing price pattern. this tells us the market has topped. And if a market that's taken years and years to top, it's just not going to bottom, in 9 months. It takes years and years to put in bottoms. So again, everything in its time. But, right now we're just swinging between two of these very big trend lines, and they could go everywhere in between. So you can see we're basically, if you drew a line through the middle here, we're kind of tracing above and below this middle line. So what I try and do is put boundaries. I try and put price. I try and put a structure. And then once I put a structure, I can understand, prices just don't hit these areas and then, bounce off, out of nowhere. This is, to me, the value of knowing and understanding price structure. So this is what I try and share with our members. And, this is what we do. So I made some kind of reference to pound New Zealand. So this is an FX pair. It's kind of an exotic pair, but I think it could be setting up for a huge move. So this is the pound versus New Zealand dollar, and it's a monthly chart. So this means that every one of these price bars represents 1 month in time. And so I'm sure you can appreciate, if you look at 1 month's worth of value or price action, it's much more valuable than knowing what a 5-minute bar is telling you. And so what do we see when we look at this pound New Zealand? So, what I said to you yesterday is that, there are basically 5 phases of the market. The market can go up, it can go down, it can go sideways, or it can be turning from a down market to an up market, or from an up market to a down market. And before it does that, it usually puts on a pattern before it swings the other way. So I will trade all 5 of these patterns, except this one. I really am not trying to, trade a range in FX or stocks and try and steal the next 50 pips before it comes flying back in my face. And basically, by and large, this is what we've seen in the pound New Zealand. It's a very exotic trading pair. You really shouldn't trade it unless there, is a formidable opportunity. And I think there may be one. So this is what I'm looking at. So again, I don't know. I'm only going to see what the market does within what I'm looking at. So you can see we've got this huge decade long. This price goes back to 2008. So we're looking at 15 years of price history here. And so we're seeing this downtrend line, and it's very possible we hit this downtrend line and we bang back here. But, I'm seeing other things that tell me we may not. We may actually bang into here and then go the other way. So why am I surmising that? And again, I'll only know when price tells me. But what I'm looking at all the way back in 2016, 2017 is this subtle looking bottom. So if a market is put in a bottoming pattern, then it's going to do what? It's going to go up over time. And since 2016, I was mainly playing this as an uptrend, and I started buying this thing at 165, and it went to 220. So that pattern did its job. Now the question is, where does it go from here? And you can see after it bottomed, this kind of little neckline was, previous resistance, and then it became support. So every time we banged into this 180 trend line, we bounced off it, and old resistance in this pattern became new support. So now we have resistance up here at about the 2000 level. And, we just have to see what it does here. But the more it kind of just hangs around here, the more it adds to the probability or possibility that we could see one of these. And we could see one of these. We could see a once in a decade move. I mean, you're seeing just crazy stuff happen in the market. And so anything's possible. You had all of this fiasco with the British pound, Now you got a new prime minister. Maybe he rights the ship, and who the hell knows? But I don't look at, prime minister and economic theory and what have you. I'm only looking at price. And what I try and do is set up risk reward trades that are in my favor. So the way I look at getting in a trade is that I look for a trend, which is kind of hard to find in this thing because it's been actually very trendless. I think we can all agree that it's been pretty sideways. But kind of buried within this is this very pivotal price action right here. So sometimes the markets actually point where they want to go. So this is what I call a key reversal. And in this case, it was a stake in the ground where when you went to 180 and by the end of the week, you were at 2000. You had a 2000 pip reversal. Now, when you see a reversal of that nature, it's like just driving a stake in the ground. And, I think it's very unlikely that you're going to, now going to go and take this out again. So if it's not going to go down, it's pretty likely it's going to go up. The problem is, you have 600 pip swings in this thing. So if you're trying to catch this move with a 30 pip stop loss, good luck. It's not going to happen. So the way you do it is basically reduce your lot size to withstand a 500 pip downdraft. When I told our members to get in here, at the 199, I said, put a 500 pip stop loss. I said, put it at, 195. And you can see thus far, it's basically maintained above that stop loss. So I've been able to stay in this trade, notwithstanding the fact that it's been whipping around. And that's what I try and do. I try and look for the bigger trades, but you have to be able to withstand the volatility. And what most people are doing is they're trying to find trades for 15 pips and putting very, very tight stop losses. And that's just a prescription over time to, bleed and die a death of 1,000 paper cuts. So what I try and do is look for a pattern, and this is kind of a weird double bottom, and then you have this key reversal. And so this is not a perfect thing, but by the end of the week, we very likely will have an inside bar. And what I mean by an inside bar is that you can see the trading range from high to low. Let's assume this is what it looks like on Friday night, sits within the trading range of last week. So I look at this as a coil, kind of what I call a storing of energy. So it's just storing energy. And I'm surmising that energy is going to uncork to the other side, to the upside. So, the way to capture this thing is that I look for the market to confirm what I'm looking at. So what I would do is I would stick a buy stop somewhere above the high of this bar and put my stop loss there. And so this is my risk. And I would be looking for a sizable move on this. If this thing starts to get going, I think it'll be, like catching lightning in a bottle. This thing could just bust out of here. You can see it's kind of flirting with this downtrend line. It snuck out, snuck back in. But I suspect if we start coming back above here, you could just get a vertical move. So I think there's a formidable opportunity. I've already bought a piece. I'm going to add to my trade after tonight's session because I'm looking at the same kind of setup on the daily where, a couple of things are happening where it's not so much what this is doing as what it's not doing. So, on the downside, I kind of see that, we have this funky bottom. And the bottoms don't have to be in the same place. But when you look back, this will look like a W bottom. And in the middle of that bottom, you have this huge key reversal right here. And what I mean by key reversal is that in one day it went to 180, and by the end of the day, it closed at 190. So it's 1,000 pip reversal off the bottom. And so that day is actually pointing where this market wants to go. So we don't have to play armchair economists or try and figure things out. The markets actually tell you where they want to go. So you can see we kind of had this funky cup and handle, or whatever you want to call it. You had a bottom here, you had another bottom here, and you had a neckline. So the neckline is simply a line that joins a thing. And typically what happens is you look for the confirmation of the neckline. And what usually happens, everybody gets excited and you get the confirmation, and then it's not unusual to get a retest above or just at the thing. And then if it makes a new high again, this is when you know that this is really good to go at this 203 area. But I'm already in this thing. I'm going to add to my trade, and I'm going to put a buy stop here, and I'm going to put a sell stop there, and see if this thing, wants to keep going north. So this is, kind of an exotic trade. It may or may not work. But if it works, it's going to work big. I'm trying to think what else I was looking at. I think I showed you PayPal last night, where PayPal's trading at, a little bit of this bottom. I said, yesterday that I would buy PayPal, buy NVIDIA. And again, this was before, we see the prices today. I said, buy this thing yesterday. It was right at the bottom of this trading channel. And then at the bottom, we had this little Eve and Adam double bottom. And an even, I don't want to get too technical, but an Eve bottom is where you see multiple attempts at one support, and an Adam is where you see a single attempt. But either way, that is a bottom. And there was actually another bottom right back here. So this was actually the guy to watch. This was the misdirect. So I always say the market's like a magician, right? A magician doesn't just rush on stage and pull a rabbit out of the hat, right? He doesn't just come here and say, okay, we're just going to keep going. The markets make it hard. They do the best to shake everybody out, rattle your confidence, and then you get out here, and then it goes there. When you're just worn down, you've thrown in the towel, and it gives you another look. But this was the governing price pattern. This is dictating what this is going to do now and probably into the future. Now we'll have to see what happens, but these short-term patterns are telling me that, I said yesterday that there was a very good chance that you were going to go and bang up into the underside of this trading range around 92 bucks. And we were up huge today. And to me, that's just not a shock. So now you've taken out the neckline of this, you basically confirm. And any pullback to this neckline, to me, I would buy this thing. Imelda says, what about the euro? So over the weekend, let me see if I can find my my emails just to give you an idea of what my work looks like. If you remember, what you can expect. So let me just see. I told our members that I think it was a pretty, I never started this. Let me just open this up. So this was my email over the weekend. I do a bit of a video report telling what I'm looking at in the week going forward. And this was my email to our members. Buy the euro at 98.87. I don't know what it's trading at now. It's trading at 99.61, so almost 100 pips higher. So if you put your buy stop here, you'd be in this trade, and it's now at 99.61. And I've got to take profit at 101.27. Now, those take profits are pretty arbitrary. What I do is I put something far away, and then I look, how does the market, does that signal get triggered? And then when it does is it confirming what I'm looking at? And if this thing looks like it wants to go much higher, I'm just going to keep moving that take profit. But I basically said that, we've been in a long-term downtrend. We're in this trading channel. Any penetration above the trading channel could result in a huge short covering rally. Now, this was also on Sunday. I said buy Meta at 130. It actually opened on Monday lower. You could have bought it at 126, 127. And today it hit 137. So kind of not sure where this thing wants to go. It's like banging both sides, but there was a trade in there. And that's really all I'm looking for in this environment, are trading opportunities. I'm not looking to stay, some things like Schlumberger, I was in for several weeks. Other things I'm just trading, using them as trading opportunities. And what I advise our members is if you have some profit, take 25% off. You're up 100 pips, take 25% of your position off. You'll go up another 100 pips, take another 25% off. And then put your stop loss at break even, and you can never lose. So this is the euro, and it's been a one-way freight train. The dollar, bonds, stocks have all gone one way for 9 months now. So you can see that this always starts with a pattern. So all you had to do was recognize this very well-formed double top at the 125 area in the euro, and you could have ridden that for a $30,000 move. For every $1,000 you bet, you could have made $30,000 on that move just by recognizing a simple pattern. So to me, patterns precede changes in direction. You can see this was going up, then it put a double top, and it also had a head and shoulders. And you can see the neckline. Once it pierced this neckline, this was your confirmation right there. And so at 115, it was game over till 95. So this is still in a downtrend. I don't think this trend has ended, but I think it's kind of long in the tooth, meaning that we've been banging, like a sawtooth, this trading band, and now we're at the top, and you could say, well, maybe it'll come to the bottom, and maybe it will. But if you start kind of, breaking out of here, you could also get a short covering rally. So, right now I'm up, almost 100 pips on that trade. And you can see that it's going to come up against resistance right there. So if you're in this trade, again, I would take 25% of your trade off. And then you get another 100 pips, take another 25, and then see where it goes. So, typically, you get a breakout, you get a pullback, and then we'll see where that goes. Or it can just completely fail here. This is still in a downtrend, and we could still come back down here. So, you just need to watch your levels, understand your risk. And these are just great trading opportunities. Neelan says, how did you know we get through the first? I don't know anything. I basically put, so this is why I tell our members, just put a feeler in there. So when I saw this inside bar, so you can see that, the last couple that range is basically inside the trading action. So I didn't know. So basically I said to our members, put a buy stop right there, 98.87, which was just a hair above the weekly high. Now you can see that it started out lower, and if it opened lower and then went lower, then that buy stop is not triggered. But that's the beauty of a pending order, and that's what a buy stop is. So you can see the week opened down and then went up, hit your buy stop, and now it's just gone up. And now you have an effortless trade. You don't have to watch it. You don't have to watch till your eyeballs bleed. All you have to do is put that trade in there, put your buy stop in there, and let the market do all the work. And where it goes from now, who knows? But now you just manage your trade. Like I said, it could hit the upside of this thing and and decide to go right back down. So you just take off some of your trade. If you're in here and it's now 80 pips higher, take off 50% of your trade. You're going to run into resistance right there. But I think that this can also have a chance of going a little bit higher. So this is a little bit tricky. This is in a profound downtrend and what have you. But I think it's just been a one-way street for too long. And so you can see on the monthly, this is just an inside bar. Really, it doesn't suggest that there's going to be a huge upside here. Not just yet. This will take a while. So things just don't go straight down and then go straight up. Although the energy's been so beaten up that you could get a 200-300 pip, release here, and it would still mean nothing. This thing's come from 125 to 95. 200 pips in that scheme of things is nothing, but it'd be a nice trade. So that is, how I trade. I'm going to kind of give you access to my book, which is a pay what you want book, meaning that you decide how much you want to pay for it. And this will give you my 4-step trading methodology. How to look for the trend, the pattern, what I call my insurance day bar. This book will give you the ins and outs of all of that. So here's the link. And again, it's a pay what you want, 5, 20, 100, whatever you want. You just add it to the cart, and all the proceeds go to the American Childhood Cancer Organization. So whatever you donate, whatever I take in from all of the royalties from my book sales, I immediately just turn around and send it to the kids at the American Childhood Cancer Organization. And thus far, in the last 12 months, I've sent over $34,000. Sebastian, you are welcome. Ella says, do you use trailing stops? So, the discussion of stops and take profits, I'm not ducking it, but it's different for every trade. So in my mind, every trade has a certain objective. And since, this is a very kind of sclerotic, chaotic trading environment, my mindset is I'm just looking for sniper opportunities. I get in, and then it gives me a pop. I get out, I recalibrate, and whatever. I don't want to, turn you into day traders. Now, sometimes there are great trades. This has been one where I, told our members to buy Schlumberger SLB at $36, and today it hit 53. So these are the kind of trades where I'll just camp out of these things for weeks. I made a lot of money on this trade. So I told our members to get in at 36 right here, and now it's at 53. And that's how you make money in the market. All you need is a couple of these a year, or even one of these. So if you get in here and take this trade, that's how you make money in the markets. But what most people will do is they'll go in and out, 10 times a day on, one bar. And so, you'll chew up your energy, your time, your money, and then you'll never be there for that. And this is what I look for. I look to take a piece of the middle of these big trades. And so it's these kind of emails that you saw on the New Zealand Canadian, on Schlumberger, on dozens of. I didn't have a chance to open up my PowerPoint to show you other trades, but I try and get on the right side of big moves, and that's what I look for. So are you saying the link is not working? So I can't pass the screen to the name. So I don't know if it's busted. I'll talk to our team and I'll try and fix this by tomorrow. Sorry about that. So Sebastian says the link does work. So I don't know what to tell you, Fabiola. Eduardo says, I didn't get out of team. What do you think is possible? It reaches the top of the channel. So good on you for sticking it out, Eduardo. I had a nice number of shares. I made a quick score. And I'm just so these markets are so choppy. The NASDAQ is down 400 pips in the aftermarket because some of these markets are getting detonated. Let me just actually put up my screen here just to see what's going on. So the NASDAQ's down 400 pips. It closed at 284. It's now trading at 280 in the aftermarket because Microsoft closed at 250. It's now 245. Google closed at 104.5. It's now 97.5. And Meta closed at 137. It's now 132. So Eduardo, that's kind of why I just hop out of these trades, because it's just, you can't, this has been a hard market to be 3 days in any direction before it turns in the other direction. So this is very much a trading market. Now, this is a little bit different than day trading, because what I do is I use the daily bars to then just set up trades to take these explosions. I'm not looking at some 15-minute crossover with some Bollinger Band. I am looking at the big picture. I am seeing where there's support. I am trying, to set up these risk reward plays. But Eduardo, this is still a downtrend. We're at the base of this thing. You could have a move back to this 220. But, it's just tricky. It's just, I think this guy puts, some kind of overhang here. So it's trading at 206. This is to 215. So you might have, some daylight between here and 215. But, this is the thing. You're going to open lower tomorrow. And, maybe on some of these things, you can buy a lower opening. And that's what I do. I use these openings as an arbitrage. If I like something, I'll buy some. If I like something long, I'll look for a lower opening to get in a position here, and put my stop loss there and create this kind of risk reward for a trade that might do that. Now, might not be this exact trade, but something like this. So, Zoom kind of took off today. I was kind of talking about Zoom yesterday. I said you could buy Zoom, and today we took off. So I would use this kind of carnage tomorrow to, hop into Zoom if it comes in lower. So I, create very tight stop losses so you can maybe risk $2 if it opens lower, and maybe it still keeps going north. Zoom is starting to feel like it's trying to put in a bottom. So, the thing is, you just see these things, and sometimes we see a lot of fake patterns or a lot of patterns that just don't sustain. So you'll see, tons of bottoms and tops. The question is, which are the real ones and which ones are really going to sustain? So you can see you're now getting into a tricky area on Zoom. You got this overhead resistance, but if you take it out, you could start getting into this gap a little bit. So now I will use, you can't let a chaos go to waste. So because of the lower openings on these, big cap, mega cap stocks, if Zoom opens $2 lower, I'm just going to buy into that on the premise that even if it opens $2 lower, it's usually got to go back and kiss the unchanged level. So I should be able to get a couple bucks, even if I'm able to buy it lower, and then see what it does. So I look at the markets in terms of energy. So I don't like chasing things and buying it right on the high. You can see this thing's gone from 70 to 84. So even if you think this is good, I'm looking for what I call the elastic band, where you pull back on the elastic band and build up that energy. You pull back like a slingshot. And so this is what I try and do, is instead of chasing the energy that's released, wait for a pullback of the energy and then look for something like that. And we may just get, a pullback on the opening in Zoom or many other things because of this, carnage in these other stocks. Now I bought, could be a kamikaze play. I bought Google today in the, aftermarket session. So I wait till, so you can see the market is trading about 98 bucks. So you can trade these pre-market and aftermarket sessions. So I will show you, and maybe it's a kamikaze play. I mean, maybe it's just crazy, but I stepped into the breach and I bought some Google right here at 98.92. So let's see what happens. Sometimes you don't even see these prices. So I bought it right here. And we'll see what happens. I mean, Google still, again, we see these patterns, but, earnings are like a kid with a crayon. These things can go anywhere. The patterns, so we see the beginnings of what looks like a pattern. But now Google is, trading down here. It's trading under 100. So I'm saying to myself, really, is this, going to open tomorrow and go like that? Does that look realistic? So sometimes I just do this visualization process. And I actually bought more shares than I indicated there. I bought some at 99 and 101 because this doesn't look right, right? So it's down here. And I'm saying, is this what it's going to look like tomorrow? It's just going to open and just go down. I mean, anything's possible. But I think it's very likely that this opens even higher than where it is now. And, we could even go back. So we'll see what happens. Right now you're looking at a bit of a pattern and, it's very difficult in here. This is Google and, I think that might be a good buy. We'll see what happens. I don't think I've got a whole lot to risk. So Fabio says all solved. Okay, cool. Eduardo, thank you. Thank you for being such a great supporter. Do you always start to look for patterns starting on the monthly and then work backwards to the weekly and daily? That is a good question, Mark. So at the end of the day, my objective is to take big moves out of the market. And in order to do that, you kind of have to understand where the big moves come from. And in order to understand that, you need to understand either the trend or the pattern. Now, sometimes I could just start with a daily time frame and start formulate some kind of thesis or a hypothesis. So I can look at this and say, this is a downtrend. And this is a head and shoulders. I can just look at this. Here's a rounding top. Here's a head and shoulders. And so it looks just like a man or woman's head and shoulders. So I don't need any more information than that. This has been a huge downtrend, and now I have a huge bear pattern in this downtrend. So now, once it crashes through that neckline, it tells me it's game on, and now we've got another move coming. So this collapsed, 20% after that, and collapsed from 115 to 95. So what I'm trying to do is try and take a piece of the middle out of big moves. And whatever time frame you can kind of study where you can assess that, then that's all you need. So now it's a little bit squishy where this is a downtrend. We may have the look of a bottom. And so now, I'll kind of toggle back between the different time frames. You can see we broke out. It looked like we could have been putting a bull trap, a bear trap, meaning that anybody who chased these lows would be trapped if this thing, comes out of here. But turns out this could be the trap, and now it's kind of gone back down. So now it's just a mess in here. I mean, if you trade in here, you're kind of between the resistance and the support, and it could go anywhere, and it probably will. So now that it's become a little bit more ambiguous, then I'll kind of start from the beginning. I'll look at a higher time frame and see if I can form some kind of thesis on what's going on. So we're just like a week before the end of the month, and we have what it looks like a key reversal, but this is why I always look at the close, because this is what it looked like today, and you can say, wow, this looks like a key reversal, but this is a monthly bar. It won't close until the end of the month, and so if it closes down here, it's going to be very different than if it closes up there, and that's why the close is so important for me. So, there's nothing really to, there's kind of a trend line that came in here. And so sometimes you get these breakouts and a snapback, and that's what this thing could have done. So remember, I am expecting this market to go much lower, but it could take another 3 months or 6 months or another 3 weeks. I don't know, but we are going to go a lot lower. So the question is, how do we get there? And so this is really somewhat ambiguous. There's not really a pattern that informs me. So you can see we have this kind of tight channel, and, anything, around that 109, 110 area, I would start saying that's where this thing is going to bang into some upside resistance. So the monthly, somewhat not really informative. And now the weekly. So I look at all of these different time frames, and if I'm confused, then I just stay out of it. I'm looking for trades where I understand what the risk and reward is. So we're in this tight channel, and it still kind of looks like this thing wants to go back to this 110. Kiss this thing, and then you can kiss it goodbye. So, again, also on the weekly, we broke out. We've kind of got a little bottom here. And so it still feels like, but, we'll have to see how we trade. Right now, this is where we're trading underneath everything. And I just can't see this thing collapsing. So I bought it. Just because I don't think I have a lot of risk. It's already down $5. So what's it going to do tomorrow? Be down 10? I don't think so. It could be. You're playing with fire when you play with these earnings trades. So it is going south. I mean, it's just continuously goes south here. So we'll see what happens. It says, do you ever look lower than the daily for entry? So that's the thing, how I toggle from the daily, the weekly, the monthly. And the idea is to find something where you can see an area that is going to project a move, a 3-day move, a 3-week move, a 3-month move, whatever it is. And so, that time frame, you may just see different things on different time frames, like the pound New Zealand, daily, weekly, monthly, and I keep toggling back and forth. I keep looking at this thing upside down and every which way but up. And so at the end of the day, I took a short position on Moderna today. Let's see, now this was just an indiscriminate trade. I shorted 3,000 shares right around where it closed. And that's kind of not really a great example of what I look to do. I always look for the market to tell me when to get in. But this thing's a little bit trickier. So with Moderna, this is the weekly chart. So the big patterns are telling me that, this is basically one big distribution. Everybody's getting out. That's one big giant double top. And if I peel back, I can look at this thing and say, looks like a huge head and shoulders with the neckline coming in right around 100. And every time you can see it comes to 100, it catches a bid, comes down, bang, comes down, bang, comes down. But every, I think rally is going to become low, less and less. It's going to run out of energy, and this will be a $40 stock. So if you have patience, then you can build a position. Now, I don't really see an exact place to get in that is perfect, but I'll show you on the daily, there's a resistance area at this 140, and I just kind of took a shot today. I sold it, and my view is if it goes higher tomorrow, I'm just going to sell more, which is a pretty arrogant thing to do because you can get taken to the park with that kind of thing. But I just think that the big picture, the big patterns tell me that this thing has topped, and there's a resistance at 140. And so I just use today's up move just to indiscriminately short into. Now, this isn't a great example, and this is not what I suggest you do. Just wait for the market to tell you. But the thing, sometimes the market may just get away from you. So this is what I'm looking at on the daily now, where you can see this is where all the support is at this 115, and we keep bouncing off. But I'm surmising that we're gonna. So here is what I call overhead supply. You can see every time this thing bangs here, 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 you can see these reversals. Makes a new high, close on the low, new high, close on the low, new high, close. So this is an area where people are selling into at this 145. And then last week we came on and we put this double top. And now we're just, in the zip code of this top again. And, typically when I see this kind of behavior, this tells me that this is short covering. So what happened was, if you went short and thought, well, I got to get short here, this is what the markets do. They just squeeze you to death. They don't let you out. There's not a downtick. But that's how I also know it's a short covering rally. When there's not a downtick and they're just trying to squeeze the life out of you, it's usually, so I'm basically saying I got short here, right where it closed. And I'm saying, okay, that's my risk. But if I'm right, I think this will be a $40 stock, and I'm going to keep building a position. So I'm going to just use that as a risk anchor. I got short here. If it keeps going up tomorrow, I'm going to keep shorting, and I'm going to see if this thing can break. So we'll see what happens. It's not a great example. So I shorted it right there at 140. Why? Because I saw this key reversal right here. You made a new high, close on the low. So whenever you revisit those things, you don't typically go through them. So I shorted literally at 140 and rode this to 123. I was kind of pissed I didn't take it, to 118, but I could also have been caught in this counter trend. So you take what you can get in this market. And that's kind of my attitude. I get in 140 and I can get out of 123 in 2 days. I'll say thank you very much and then look to get back on this bus again. So now, to me, this is the real pattern. This is the distraction. So there's a lot of nuance here. I can't, go through everything, but at the end of the day, I don't know what these companies do, nor do I care. I don't know what their balance sheet is. I don't know what their cash flow is. I don't know anything about these companies. All I do is make risk and reward calculations. Where I got in here, this is my risk, which was $1 away, and I made $17. So if you can, risk $1 to make 17, that's a ridiculous, example. But I look at things sometimes with PayPal or NVIDIA, where I calculated that there was like a $2 risk to make 10. And that's what I look for. I look for little pockets where I can understand risk. And this game is all about understanding risk. Where something's going to go, how it's going to get there is all, kind of conversation. So the question of take profit and what have you is that you just got to understand levels. So if you get in here, then, the markets observe major levels. You can see they hit these levels and they bounce off of them. And so if you get in something here, then obviously the risk reward dynamic is going to change as the trade keeps going. So yes, I do move stop losses. Yes, I do move take profits. And I look for a market to put on a pattern, just like it topped out. You can see this was very subtle, but it put on a little double bottom right there. And then you don't even see it. It tricks you out. It looks like it's going to make a new low. It stops short, and then it does one of these. But it put on a bottom right there. So these markets put on little subtle clues. And it's like playing detective. You just have to look at the clues. You can see those key reversals at bottom told you that this is an area where it's just very dangerous to be short. But now I think, it's also, dangerous to be long up in here. So, I'm just counting on this thing playing in this area and eventually going much lower. All right, I'm going to end it there. I'm sorry for the technical glitch, and I'll see you back tomorrow at 4:30 Eastern Standard Time. You're welcome, Neelan, Antonio. You're welcome, Ella, John, as always. And as always, sorry again. I was just a little bit discombobulated, not quite sure what's going on. But thanks for hanging in there with me. I appreciate it. Yashvin says, great knowledge. Thank you. Thanks, Eduardo, as always. A little overrated, but I'll take it. Thanks, everyone. See what happens tomorrow. Bye-bye.